Hello, everyone. My name is Moe and welcome to another video of Income Investors. With me today is John Whitefoot. But before we talk about this exciting dividend play, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with a lot of risk. No matter how safe an investment sounds, there are risks involved. To read more about risks, please see the description below. We've all heard about, Facebook, Amazon, Shopify. They're businesses that work in shadows. You don't hear about them, but they do very critical things for a bigger company. This can include record management, data management, and secure shredding. With this in mind, I want to introduce the company that we're going to be talking about today, and John profiled it on incomeinvestors.com. The company is called Iron Mountain Inc., and it's traded on New York Stock Exchange under symbol IRM. Iron Mountain has a huge international presence in the specialty field. They continue to post strong financial results. They provide buy and hold investors with long-term share price gains and reliable growing dividends. So John, if you want to jump in here.
Yeah, thanks, Mo. I've been following Iron Mountain for a couple of years now, and you're right. It's one of those dividend stocks that operates in the shadows, and most people don't really seem to talk about. I'm not totally sure why, or maybe I am. Maybe it's because data management and paper shredding isn't all that exciting. But the fact is, there's more than enough compelling reasons why Iron Mountain should be on the radar of every income investor. It continues, like you said, report strong financial results, provide impressive guidance, has a reliable dividend. On top of that, Iron Mountain stock has been trending steadily higher ever since it went public in January 1996. It also just announced a new initiative to boost revenue and earnings. So these are all reasons why I think people should pay attention.
Now let's get into the fun stuff. What does Iron Mountain actually do?
Well, it's a specialty REIT. It's not totally easy to pigeonhole. It's somewhere between an industrial REIT and a data center REIT. More simplified, it's a global leader in the storage and information management services, which includes records management, data management, digital solutions, and secure shredding. The majority of its business, 64%, comes from the storage segment, with 36% of its revenue coming from the service segment. Its infrastructure, and it has 225,000 global customers across the legal, financial, healthcare, insurance, energy, business, entertainment, and government organizations. And it has a real estate network of more than 730 million cubic square feet of global storage solutions, more than 1,380 facilities, and across approximately 59 countries and 6 continents. Here you'll be able to not see the customer's valued assets, which includes critical business information, highly sensitive data, cultural and historical artifacts. It's also good at what it does too. In addition to having more than 225,000 customers, it's also trusted by 95% of Fortune 1000 companies. Company's retention rate is pretty solid too, and held steady at a massive 98% over the years. While Iron Mountain has been reporting some pretty healthy revenue growth and robust margins, it's always looking for ways to increase shareholder value. To that end, the company has made significant progress in shifting its revenue mix to faster growing businesses like emerging markets and data centers.
John, can you elaborate a little bit on the data segment?
Yeah, the data segment is expected to be a big revenue generator over the coming decades. I think when people think of data centers, for some reason, they think of customer data centers where people are sitting there with their headphones on, but it's not that at all. Mm-hmm. Data centers are like these massive tech buildings that centralize an entire organization's IT operations and equipment for the purpose of storing, processing, and disseminating data and applications. It's basically the brain center of any business. Because they house an organization's most critical and proprietary assets, data centers are vital to the continuity of daily operations. So Iron Mountain actually got a head start on the data center biz when it began leasing wholesale and retail data centers in its massive 145-acre underground facility in Pennsylvania, and I think around 2013. And it's been building and buying and building data centers aggressively since then. Today, it has a platform of 665 megawatts, including 340 megawatts of capacity to sell. For example, a single megawatt can generate about the same amount of electricity consumed by up to 1,200 homes annually. And in the just completed first quarter, Iron Mountain signed 52 megawatts of new and expansion leases. It currently has a number of data centers under construction in the US, United Kingdom, and India. And its customer base includes 1,300 plus customers, including 5 of the world's biggest hyperscales. And some of the biggest hyperscale companies include, I'm not saying these are their customers, But as an example of what a hyperscale is, Amazon, Microsoft, Google, Alibaba, IBM, and Oracle. Those are all examples of hyperscales. The global data center market, again, it's a huge long-term potential. Over the next 5 years alone, the market expected to grow by over 40 billion. So Iron Mountain has a head start, or a big lead in that.
No, John, interesting. From what you've told me so far, it's pretty clear that Iron Mountain is one of the biggest and best in business when it comes to data centers, and the company's some great things. But earlier you had mentioned about something about new initiatives. So if you want to elaborate there as well.
Even though things are going really well at Iron Mountain, there's always room to grow and improve, and that's what Iron Mountain is looking to do. So back in September of 2022, it unveiled Project Matterhorn, an initiative designed to accelerate its growth. This includes investing 16% of the company's revenue, which is about 4 billion, to capture a larger share of its global addressable market, which, as I said, has evolved from shredding to data centers. By building on its key initiatives and strengths, Iron Mountain is targeting revenue compound annual growth rate of about 10% to 7.3 billion in 2026. An adjusted earnings before interest, taxes, depreciation, and amortization, or EBITDA, compound annual growth rate of 10%. An adjusted funds from operation compound annual growth rate of about 8%, and about 150 million in one-time costs per year for 2023 to 2025. Nothing comes for free. So there's going to be some costs associated with those growth prospects.
Very, very true. And how is it translating, or has there any impact on its recent first quarter results?
Yeah, again, they just announced it back in September 2022, but management even said in the first quarter results that the success of Project Matterhorn exceeded its expectations. To that end, in the first quarter, revenue increased 5% to a record 1.31 billion. First quarter net income jumped 57% year over year to 66 million, or 22% share. Adjusted earnings increased 8%. Adjusted funds from operations jumped 8%. And AFFO, or adjusted funds from operation, were up 7%. It also provided a bullish outlook for 2023, with revenue expected to climb 9%, adjusted earnings growth of 7%, adjusted funds from operation growth of 5%, and adjusted EPS growth of around 4%.
Those are some solid numbers given what's been happening in the tech sector recently. Companies have faced a lot of headwinds over the past 1 year or so. All right, John, now tell me a little bit about their dividends and how their unit price has done over the past, say, last month and over the past 1 year.
Iron Mountain has a history of raising its annual dividend, but it's held it steady at 0.6185 cents per unit since the start of 2020. This works out to an annual dividend of $2.47 per unit for a yield of 4.48%. The dividend is safe. If anything, there's more than enough room for Iron Mountain to resume increasing its annual distribution. In fact, its dividend payout ratio has been falling over the last few years, from 81% in 2019 to 66% in 2022. Again, that's more than enough room for them to increase their dividend. In addition to reliable high-yield dividend, Iron Mountain has also been rewarding buy and hold investors. Iron Mountain stock is up about 9% over the last month, 16.5% over the last 6 months, 14% year to date, and 8% year over year, which, is handily trumping the broader market.
All right, John, thank you so much for providing insights on Iron Mountain. Just to recap a little bit, Iron Mountain has a dividend yield of 4.48%, and it has providing some solid returns since going public in 1996. If you were to reinvest the dividends, Iron Mountain has provided a return of over 4,200%. Over the same time, S&P 500 has increased about 570%. There are a lot of compelling reasons to keep an eye on Iron Mountain. This company has consistent dividend, a strong balance sheet, and it's growing. Over time, investors could generate decent profit and income through Iron Mountain. That's traded on New York Stock Exchange under symbol IRM. That's all for today. Thank you for watching, Income Investors. If you want to learn more about John's ideas, you could go to incomeinvestors.com, and don't forget to like this video and subscribe to our channel, and we'll see you soon.